Welcome back to the Japan FinTech Observer. Get ready for a quick hit of the latest news in Japanese finance and fintech. We're diving into the headlines, breaking down the trends, and leaving you with the insights you need to stay ahead of the curve. Let's go.
Today, we are taking a closer look at a remarkable turnaround story in the hyper-competitive world of global investment banking. It's the story of how Nomura, the Japanese financial giant, has quietly and systematically rebuilt its global markets franchise into a formidable global player. For years, Nomura's markets division grappled with a reputation for volatility and a business that felt more like a collection of regional hubs than a cohesive global unit. It struggled to consistently compete with the US and European bulge bracket firms on the global stage. But under the leadership of its head of global markets, Rig Karkanis, a significant strategic pivot has been underway, and the results are now impossible to ignore. So, what did they change? The strategy was twofold: stabilize the foundation and then build for growth. First, they moved decisively away from a heavy reliance on macro and proprietary trading, the source of that past volatility, towards a more durable, client-centric model. The focus shifted to what clients needed: reliable execution, financing solutions, and sophisticated structured products. Second, they began breaking down the internal walls between Japan, Europe, Asia, and the US. The goal was to create a single, integrated global platform where a strength in one region, like their securitization expertise in the US, could be leveraged for clients in Europe or Asia. It sounds simple, but in banking, it's a massive operational and cultural undertaking, and the numbers speak for themselves. After years of hovering around the $4.8 billion mark, the division's revenues have surged, now tracking at an annualized run rate of over $6 billion. Crucially, this growth is coming from its international operations, proving the global strategy is working. But the real story is under the hood. It is not just about top-line growth, it is about the quality of that growth. The division's quarterly revenue volatility has been slashed in half, now running significantly lower than the peer average. This stability is a direct result of that strategic shift. Today, over 55% of their revenue comes from more predictable, recurring sources like fees and financing, a huge change from the past. This has cemented Nomura's dominance in its home market of Japan, where it is ranked number one in areas like equities and credit. But more impressively, they have made serious inroads elsewhere. They are now a top 2 player in Asian emerging market credit, a top 3 player in US-listed equity options, and a top-tier firm globally in convertible bonds. These are not just league table positions, they represent real market share taken from established rivals. 2 areas serve as prime examples of this strategy in action. In securitized products and private credit, Nomura has transformed what was once a simple trading desk into a global financing powerhouse, adding over $600 million in revenue through structured lending and asset finance. At the same time, they have completely rebuilt their international wealth management business. Since 2020, both assets and revenue in that unit have quadrupled, a testament to successful targeted investment. Now, for any bank, the ultimate test is efficiency. Can you grow without letting costs spiral out of control? This is perhaps the most impressive part of Nomura's story. While revenues have climbed, the firm has held its fixed cost base almost completely flat. This has created powerful operating leverage, causing their cost-to-income ratio to plummet by 15 percentage points. It is a textbook case of growing smarter, not just bigger. So what is next? Nomura is not resting on its laurels. The firm has laid out an ambition for 2030 that signals a new phase of growth. The plan is to maintain a diversified business mix, roughly 40% from equities and 30% each from macro and spread products, while relentlessly focusing on productivity. The targets are ambitious, pushing their pre-tax profit margins towards the 50-60% range, a level that would put them in elite company. In conclusion, Nomura's Global Markets division has executed one of the most effective turnarounds in the sector. It has transformed itself from a volatile, regionally focused business into a stable, client-driven, and increasingly profitable global competitor. They have proven they can build and scale new businesses while maintaining strict cost discipline. The challenge now is to sustain this momentum and continue closing the gap with the very top players. For now, it is a case study in strategic discipline that Wall Street and the City of London would do well to watch closely.